Debunking the dollar demise, separating myths from realities. Recent headlines predicting the downfall of the US dollar may be more fiction than fact. You've likely encountered numerous articles, posts, and videos proclaiming the end of the US-Saudi Petrodollar agreement, supposedly giving Saudi Arabia the freedom to sell its oil in any currency, thus heralding the dollar's demise. Over the next few minutes, we aim to clarify these misconceptions and examine what is truly happening with the dollar. The myth of the petrodollar agreement. Many reports suggest an official petrodollar contract between the United States and Saudi Arabia, claiming it lasted either 50 or 80 years and has now ended. This purported termination supposedly allows Saudi Arabia to sell oil in any currency. However, here are the facts. 1. No formal contract ever existed. 2. Saudi Arabia has always had the freedom to sell oil in other currencies and has been doing so for years. 3. Any agreement was informal and not bound by any expiration or termination date. The reality of the petrodollar agreement. While the notion of a formal petrodollar agreement is a myth, there is an element of truth that makes the story plausible. After the US abandoned the gold standard, it needed to boost global demand for dollars. An informal agreement was reached with Saudi Arabia. They would sell oil in dollars, buy American weapons, and invest in US treasuries. This arrangement helped stabilize Saudi Arabia's dollar-pegged currency and remains effective today. What is actually happening to the dollar? The question isn't merely about the US-Saudi agreement, but concerns the broader global role of the US dollar. There are valid concerns about the dollar's future, influenced by factors like BRICS and SWIFT. The answer to whether we should worry about the dollar's imminent demise is nuanced. Dollar usage around the world. According to the IMF, the US dollar's share of global flows has grown from 18% to almost 33% over the last 4 years. The dollar's role in foreign exchange transactions has increased to 88.4%, and its use in international SWIFT payments has risen to 46.5%. Contrary to popular belief, the dollar's usage in global transactions is on the rise. The dollar as a store of value. While the dollar's role in payments is increasing, its role as a store of value, measured by its use in global reserves, is declining. Data from Goldman Sachs and the International Monetary Fund show a steady decline in foreign holdings of US Treasury bills and other dollar reserves over the past 15 years. Meanwhile, currencies like the Chinese renminbi, Canadian dollar, and Australian dollar are gaining ground. The role of debt and dollar dominance. Interestingly, gold has emerged as a significant player in global reserves over the last 15 years. Central banks have increased their gold holdings, indicating a shift away from the dollar. Conclusion: the dollar's future. The US dollar is unlikely to disappear anytime soon, despite some institutions and nations reducing their dollar holdings. The global addiction to debt ensures ongoing demand for the dollar. However, holding US dollars may not be the best strategy for preserving wealth due to inflation. Practical advice. If you're concerned about inflation eroding your purchasing power, consider these options. High-yield savings accounts or money market funds that pay at least 5%. Short-term treasury bills for higher rates. Investing in a diversified portfolio to beat inflation through capital appreciation. Utilizing fixed-rate debt to invest in income-producing assets, effectively shorting the dollar. For personalized investment strategies, consider subscribing to our channel, All Things Money. Thank you for watching, and have a great day.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.